Welcome back to the Weekly Market Pulse, your go-to source for understanding the ever-evolving world of finance. I'm here to break down the numbers, trends, and headlines that shape your investments. Whether you're a seasoned trader or just starting your financial journey, this analysis is designed to keep you informed and ahead of the curve. So let's get started. This week, global markets delivered a real mixed bag. The S&P 500 slipped by 0.8% as investors reacted to hotter-than-expected inflation data and some cautious corporate earnings. The Dow Jones Industrial Average edged up 0.3%, showing resilience in the industrial and energy sectors, while the tech-heavy Nasdaq dropped 1.5% facing headwinds from disappointing guidance in major tech firms. Over in Europe, the FTSE 100 managed a flat finish, with defensive stocks offsetting some losses in financials. Meanwhile, in Asia, the Nikkei 225 posted a modest gain fueled by optimism in automakers and an improving export outlook. Let's break down what drove these moves and what they could mean for the coming weeks. The big focus this week was the latest Consumer Price Index report. Inflation jumped to 4.2% year-over-year, beating analyst expectations and raising eyebrows across Wall Street. This spike has intensified speculation around the Federal Reserve's next move, with many now expecting a more hawkish tone and a possible rate hike sooner than anticipated. Meanwhile, unemployment figures held steady at 3.7%, signaling continued strength in the labor market, and GDP growth came in at an annualized 2.1%. These economic signals are crucial for understanding the broader market sentiment and where policy might be headed. Now, let's shine the spotlight on a few standout sectors. Renewable energy was the big winner this week, fueled by new government incentives and solid Q1 earnings from companies like NextEra Energy and SolarEdge. NextEra, for example, saw shares climb 6% after smashing analyst estimates. On the flip side, traditional retail struggled as rising operating costs and shifting consumer spending habits hurt profitability. Shares of Macy's dropped 4% following a weak earnings outlook. The big question is whether these sector trends will stick, or if we could see a reversal soon. Earnings season is in full swing. This week, Microsoft reported strong cloud revenue growth, sending its stock up by 3%. Their Azure segment absolutely crushed expectations, and investors loved it. Meanwhile, Disney made headlines with the announcement of a major streaming partnership, which could reshape its competitive landscape in media and entertainment. Investors are weighing whether this move can drive long-term subscriber growth. These company updates are more than just headlines. They offer real clues about where the market might be headed next. Looking ahead, all eyes are on next week's Federal Reserve decision and the upcoming manufacturing PMI data. Both could spark some serious action in the markets, so keep them on your radar. Remember, staying informed is your best defense in these dynamic times. Thanks for tuning in to the Weekly Market Pulse. Don't forget to like, subscribe, and hit that notification bell so you never miss an update. See you next week, and happy investing!